Hey guys, Chris from Empower here. Well, we're back with another round of stimulus and we're back on the roller coaster. What a ride the last couple of weeks has been, and I don't think it's going to slow down anytime soon. So the purpose of this video is to run through the JobKeeper program, and I'll also run through the Queensland government loan scheme that they've got available now, which can be pretty handy for a few businesses. So basically, the purpose of these videos and the reason why I do them is that if you read the media, you'd think that basically small business owners could retire in 6 months' time. We all know that's not the truth. So I'm here to cut through all the hype and really drill into the detail and let you guys know exactly what's in it for you and for your business, because that's really important. So for starters, the JobKeeper payment. So what's been reported is that basically the government will give you $1,500 per fortnight per employee for up to 6 months. What a win. How good is this? But let's get into see who's eligible and how it actually works with timing of payments, etc. So to be eligible, there's a huge grey area around this. So what they're saying at the moment is that your turnover needs to reduce by 30% or more compared to a period a year ago. So they're basically saying if your March 2020 is 30% or more less than your March 2019, or if your April 2020 versus your April 2019 is over 30% less, then you and your employees will be eligible for this payment. So if your turnover does not decrease in that time, then unfortunately, there's nothing in it for yourself or for your employees on this one. A few things that spring to mind, a few issues around this one. Obviously, this is still to be debated in Parliament, so we haven't had any clarity around some of these issues yet, which hopefully they will come out at a later date anyway. So if you're a startup and you don't have comparative figures from a year ago, the way it reads at this stage is you're not eligible. Another issue is that if you have bought a business within the last 12 months, again, you potentially, depending on how the purchase went, you may not have figures from 12 months ago if you bought in a new entity. So again, you may not be eligible. Another issue is that we've seen in some industries, in particular building and construction industry, so a lot of guys are still trading as normal because the business is still operating and they've got a long lead time. So the jobs that they started, say, a month or two ago are still running through and they haven't been affected as yet. We've been chatting to a few guys in that industry and we're expecting potentially all this to hit them towards the end of the year, so in 6 months' time, because there's a few house sign-ups that have potentially not gone through or may not be going through for the next few months. So this program is only for 6 months. So if you're, say, as an example, in the building game and your turnover is not affected because you do have a long lead time, then you will not potentially be eligible either, even though you may not feel the effect of this until 6 months or 12 months down the track. So not every business is eligible. It's only if you've been severely affected by what's happening out there. So basically, eligible employees. So if you tick the box of 30% decrease in revenue, so which employees are actually eligible for this? So employees that you had at the 1st of March 2020 are eligible. So those employees include full-time, part-time, casuals, and employees who have been stood down. But the kicker here is with the casuals, you would need to have employed them on a continual basis for 12 months or longer. So if you're a seasonal business or if you have a high casual staff rate and a high turnover rate, chances are you may not have many casuals who have been there for 12 months or more. So if your business is made up of a lot of casuals, short-term casuals, there's nothing in it for you guys in this one either. So with that one. So again, so like the first stimulus that was released, it went on the pay-as-you-go to employ people. So that's only if you really had employees in your business. There was nothing really in it for self-employed. So this program, it does cater for self-employed. So this is a big tick with this one. So if you are self-employed, the same rules apply, except obviously you get the money, not your employees. So if you are self-employed and your turnover decreases by 30% or more, again, we're waiting on the grey, or there's a lot of grey areas as to what constitutes a 30% decline. But obviously, if you've been severely affected, then chances are you're going to get it. And so self-employed will be eligible for this as well, for the $1,500 a fortnight. Okay, so the payment process. So who is getting paid what, and how does this work? So if you currently pay your employee more than $1,500 a fortnight, you must and they're still employed in your business, you must continue to pay them their current wage. So if they're earning, say, $2,000 a fortnight, you need to continue paying them $2,000 a fortnight. The $1,500 is purely just a reimbursement to help go towards that $2,000 a fortnight. So if your employee currently receives less than $1,500 a fortnight, they will now be increased to $1,500 a fortnight. So if they're currently on $1,000 a fortnight, you now need to increase their wage to $1,500 a fortnight. So one thing that may, again, potentially one of the issues that I can see is with that they haven't come out with yet. So if you currently have to pay payroll tax, I know there's deferrals for that, but you still have to pay it at some point in the future, whether the payroll tax is on the full $1,500 a fortnight or it's on the $1,000. So we don't know that detail yet. And work cover, so is work cover on the full $1,500 or is it the $1,000? We're waiting to find out what's happening with that one. One thing we do know is that super. So super is still only due to be paid on what they would have normally received. So if you were currently paying them $1,000 a fortnight, you only need to pay super on the $1,000 a fortnight. So there's no need to pay super on the extra $500, but you can choose to pay the extra super if you wish. So if an employee has been stood down, then you can pay them $1,500 a fortnight to keep them on your books and keep them engaged within your business. That way it is easy to rehire them when they, or reactivate them, I should say, when you're ready to ramp up again. So again, this lasts for 6 months. So if you've stood someone down, you can pay them $1,500 a fortnight, and then for 6 months, and then at the end of 6 months, then you can rehire them and off you go. So again, with this one, so there's no super if your employee is stood down, there's no requirement to pay super on that one unless you wish to. But again, we're still not clear on payroll tax and work cover and all those other costs like that. So you can subsequently, so for people that have already been stood down, you can re-engage them, but they must be on a minimum of $1,500 a fortnight. So if they were a casual, again, earning, say, $1,000, no, you now need to pay them $1,500 a fortnight. So the timing of these payments. So the subsidy was announced on the 30th of March. The first payments will not be going out until the first week of May. That's right, 5 weeks after this was initially released. And it will be no sooner than 5 weeks. So from the reading that I've gone through so far is that you need to pay your employees the $1,500 per fortnight between 30th of March and potentially the first week of May, if you get the money in that in the first week of May. You still need to pay your employees that much before you get reimbursed. So in the long run, it should be basically square, but you need to find the cash in the short term over the next 5 weeks to pay these employees. I think that is obviously in practical terms, there's going to be a few issues with this one. So, but unfortunately, that's just the way it reads, and I guess that's what's happening with that one. So just be aware that you still need to pay the employees in the short term before you get reimbursed. And it's an ongoing thing. At the end of every month, the government will pay you at the end of every month. So if you're interested in the JobKeeper payment, the things you need to do, you need to jump on the ATO website and register your interest. So if you just go to Google and type in ATO JobKeeper, it'll be the #1 in the Google. So click on that and register your interest. And then because they haven't released a full detail on what's happening yet, you'll get updates as it goes through. So you'll be the first on the list to receive the news. So you will potentially receive the information at the same time that we will to keep you up to date with what's happening. So if you do find yourself eligible, you need to provide to the ATO information on your eligible employees. So obviously the ones that were engaged at the 1st of March 2020, and you need to ensure that each eligible employee still receives their $1,500 per fortnight. So, again, so if you've got, half a dozen people on your books, you could be looking at anywhere around $20,000 for those 5 weeks that you need to find to pay them before you get reimbursed. So again, this timing and payments is a huge issue. So just be very wary then. You need to notify your employees that they will be being paid the JobKeeper, purely because they might have already gone to Centrelink for the Job Seeker program, or they might have 2 or 3 different jobs and they can only claim it once, so just to make sure they're only claiming it once. And you need to provide information to the ATO on a monthly basis. So they haven't said what that information exactly is yet, but I believe it will be your revenue per month, so they can monitor your sales to see if they go back up. Then I believe that they're probably going to cut you off from this one. But if it remains low, then they will continue to keep paying you. So you need to obviously give the number of eligible employees, etc. from there. So that is the JobKeeper program in a nutshell. So I won't probably give any more commentary on that. We'll wait to see what more detail comes out around that one. Obviously, there's a lot of grey areas that, so we just need to, we'll be in a bit of a holding pattern with this one until we get more detail when they resume or when they go into Parliament and figure out what's actually happening with this one. So second one, so the Queensland Government loans. So they've now released a detail on the Queensland Government Job Support Loan Scheme. So basically how it's going to work, it's a 10-year loan. So loans up to $250,000. If you get a loan under $100,000, it's unsecured. If you get a loan between $100,000 and $250,000, they take security over your business assets. So it's effectively like any normal commercial borrowing arrangement. So what they are saying with the repayment terms, so the first year, there's no interest and no repayments at all. So years 2 and 3, 2.5% interest only. So if you get a loan of $100,000, in the first 3 years, you only need to pay back $5,000, which is massive given the current environment. The following 7 years will be on P&I until the loan's paid out from there. So the loan amount that you can get, it's a 50% of your wages bill for the last 2 financial years as an average. So if you've been paying your employees $200,000 a year for the last 2 financial years, so 2018 and 2019, $200,000 each year, you'll be eligible for a loan of $100,000. So how the loans must be used. So this is critical to note of where the funds must go. So it must go obviously to paying employees' wages. Basically, the purpose of this loan is to keep people employed. So paying creditors, business loans, so not paying out business loans, just paying the repayments. So paying rent and rates, things like that, and just your day-to-day general running costs of the business. So vehicles, phones, things like that. So expenses that aren't eligible for this scheme is that you cannot refinance your existing business debt. They don't want you getting these cheaper loans and paying out your existing stuff. They want this used to go back into the economy. You cannot use it to purchase new equipment either. So basically to be eligible, you must be registered for GST. You must have 1 or more full-time equivalent employees in Queensland. And you basically must have been in business since the 1st of July 2017. So if you've been in business for basically 3 years or more, you'll be eligible for this one. And so the other requirements for this one is that there will be annual reviews. So they want to monitor your figures to see how you're trading to make sure you can keep repaying the loans, just like a normal commercial bank loan. And there may be potentially audits to make sure that the money is going to those eligible expenses from there. So if you are interested in this one, you can jump over to the QRIDA website and register your interest. You can apply from now. You will need a fair bit of info, financials, tax returns for all individuals, ATO accounts, bank statements, everything like that, just like a normal loan application. and jump on there. So if you do need our assistance with this one, let us know, and we can help where we can. So with these loans, what I would say is that if you are going to go through a hard time over the next few months, do not get this loan if you don't think your future profits can pay for your short-term losses. So please do a cash flow forecast or rough budgets to see where you'll be at, to see where you will be over the next few months. And if you believe that you can recover the next few months' losses with future trading, then this is going to be a massive help to help in the short term. And again, so if you don't qualify for this loan under the eligibility rules, or you're not comfortable borrowing money from the government and handing over your figures every 12 months, the federal government has basically given the banks, the commercial banks, they've released a lot of money with basically and backed it with 50% guarantee. So the commercial banks, they should be armed with a lot of loans at the moment to lend a small business. So if you are interested in this, chat to your business banker. If you're unsure or you want a better deal, just let me know, and I'll try and point you in the right direction to make sure they're getting looked after there. So that was basically those two things in a nutshell. Plenty to go through there, plenty of things to look at. So any questions, please let me know, and I look forward to seeing you all in person again one day soon, hopefully. Thanks, guys. See you.